चलो रेडी का?
अरे अरे अरे
Rolling and action.
Hey folks, CA Rachana Ranade here and I welcome you all. Hey folks, CA Rachana Ranade here and I welcome you all to a very interesting video which is about best ELSS fund of 2022. I'm sure many of you might be like lazy as me, right? Many times it happens that we get alarms to do certain action but we just keep on hitting the snooze button and at the last moment we panic. Does that happen to everyone? You bet. It is everyone. Just have a look at this chart. This chart talks about how many people invested in mutual fund at the last moment just to save their taxes. Have a look at this chart. March 2019 figure says the mutual fund inflows for a tax saver mutual fund, ELSS, was 2,742 crores. Why? Because people wanted to save taxes in 2019. Then starts the new financial year 1920. Then look at the April data. April is just 459 crores. Pura saal baki hai abhi. And then towards the end, March 2020, again people have woken up, right? What is the data figure? 1,551 crores. Come next year, April 2020, again people are chill out. Again you can see a drop. March 21, again alarm, saving taxes. And you can see again an increase in figure. Same repeat telecast for 2022 as well. So this is the whole reason why I thought I should be making a video at the beginning of the financial year and not at the beginning of the calendar year so that everyone wakes up so you don't dare and hit the snooze for your investment alarm and do your investments very systematically throughout the year. Thanks a lot everyone for the love and support that you have given for the English channel and I'll be really grateful if you shower the same love and affection for the Marathi channel too. Before moving on to what is ELSS, let me give a quick shout out to Aditya and Anuj for their wonderful support. Everyone, please keep up filling the comment section with all your wonderful comments. So let's move ahead with what is ELSS. ELSS is a diversified equity mutual fund scheme which enjoys tax benefits under Section 80C. I'm sure everyone knows that if I'm talking about Section 80C, maximum deduction that you can get is up to 1,50,000 rupees. What is the lock-in period here? Lock-in period will be minimum 3 years. In simple words, if I invest my money in an ELSS, in an equity-linked savings scheme mutual fund, I will not be able to withdraw it for a minimum period of 3 years. Okay. But then a big question arises is that if I'm doing an SIP, then what? Every installment will have a lock-in period of 3 years. So as an example, right now we are in the month of May 2022. The installment for May will be locked in for 3 years from May. The installment of June will be locked in for a period of 3 years from the month of June and so on and so forth. I hope you have understood this point as well. And very important, if you were to just ask me for a wrap up of what is an ELSS in short, it's nothing but a flexi cap fund which is coupled with taxation benefits. For those who don't know what's a flexi cap fund, it means a mutual fund which can invest in large caps also, which can invest in mid cap also, which can invest in small caps also, and that too without any restriction. And also one more point, that you also don't have any restriction for what? For sharing this video with all of your friends. Now let's quickly understand why investing in ELSS can be beneficial. Number one is that the amount that you could save on taxes could be up to 46,800 rupees. But of course, this amount is subject to you are into the 30% tax slab, right? And assuming that you are investing entire 1,50,000 rupees, the maximum amount. Now, this is maximum amount. What is the minimum amount? Minimum amount is as low as 500 rupees. So for those who give me excuses that I don't have enough money, after doing all the expenses, I'm hardly left with any money, your excuse is gone. The minimum amount is just 500 rupees. The third one is that you get a higher potential return as compared to other ATC investments. So if I'm comparing equity linked savings scheme mutual fund with a tax saver FD, definitely ELSS will give you higher returns. I should not use the word definitely, I should say potentially it will give you higher returns. PPF also, compared to that potentially higher returns, ELSS will give. Same copy paste for even NSC, that is the National Savings Certificate. And if I compare the last point, which is the lock-in period, ELSS has the shortest lock-in period. Just to give you an example again, tax saver FD minimum lock-in period is 5 years. For PPF also, the base lock-in period is 15 years with some exemptions of course, but as compared to these, definitely I can say that ELSS has a very short lock-in period of just 3 years. Now let's move on to a very important point, which is about various parameters that you should analyze before investing in any mutual fund. The very first parameter can be of returns. Here you can find that there are 3 types of returns. The very first one is calendar return, the second one can be trailing return, and another one can be a rolling return. The first 2 types of returns, that is calendar return and trailing return, you'll definitely be able to find out in my YouTube video. So whenever time permits, you can check it out, right? The next one is a rolling return. Just for you to give a quick explanation on that, a rolling return tells us the consistency of returns, right? And if you want to know about rolling returns in absolute detail, how to check that, various websites that you can refer my course on magic of mutual funds, and there's a coupon code there, you can also check that out. Well, the next point is AUM, that is assets under management. Thumb rule, higher the better. I'll give you a simple parallel example for that. So assume that you have gone to a chowpatty to eat some lip smacking bhel, and you find that there are 8 to 10 people who are selling bhel. How do you choose which could be the appropriate stall to eat tasty bhel? Simple thumb rule that we use is the bhel wala bhaiya who has a lot of crowd, that bhel might be tasty. That is what our logic says, right? Same logic, copy paste, I can apply for a mutual fund. Higher crowd which has gathered in a specific mutual fund, higher crowd in terms of money, that is nothing but AUM. So higher AUM is equal to, I can say that fund seems to be more trustworthy, more popular, and that is why while analyzing any mutual fund, one more thumb rule can be AUM, simple words, higher the better. Third point can be portfolio turnover ratio. What does this mean? It means that how many times the portfolio manager is churning the portfolio. How many times is he buying and selling the stocks which are there in the mutual fund portfolio. Interpretation number 1 can be that the portfolio manager is really alert and he is trying to invest as per the current trends. But the second implication of that can be higher the portfolio turnover, the expense ratio might be higher. So I personally, while checking any mutual fund, I prefer that the portfolio turnover ratio is comparatively lower. The next one is expense ratio. Of course, no need to even tell this, but expense ratio, obviously rule is that lower the better. Next one can be Sharpe ratio. Again, I'll tell you in simple words what we mean by Sharpe ratio. It means that how much returns the mutual fund is able to generate over and above the risk-free return. Okay, risk-free return, let us say I'm saying that government securities give me 6% returns. If any mutual fund is giving return over and above that, that is what I'm interested in, right? And that over and above that return, that we can calculate with the help of Sharpe ratio, right? So again, what is the thumb rule? Higher the better. Last one can be portfolio concentration. Here, you can see how much portfolio has been concentrated in the top 10 stocks. So the concentration in a single stock or even in top 10 stocks should not be very, very high. I understand that it will be shared higher in the top 10, but it should not be like a very lopsided one where top 10% of top 10 stocks contribute 80% of your portfolio and balance contributes to just 20% of the portfolio. So I always see that the portfolio concentration is not very high. So now let's try and choose the best ELSS mutual fund for the year 2022 based on top 10 parameters. So for that, what I'm doing, I'm checking out the website valueresearchonline.com. This is not a paid promotion. I genuinely refer this website. That's why I thought of sharing this with you. I'm just going down, scrolling down, and after doing that, here you can see one tab, which is the fund selector. Just click on that, and right now we are checking out ELSS funds. So let me just untick this and let me tick ELSS equity. Okay, I'm just scrolling down and I want only open-ended funds. I don't want close-ended funds. I want only direct plans. And value research also gives certain ratings. So just to lessen our efforts, what I'm going to do, I'm going to untick all except 5-star rated funds, right? And based on that, what I'm going to say, update fund list. Oh, I can see now out of a lot of schemes which are listed on this portal, only 3 appear in the snapshot. So these are like top 3 mutual funds as per the ratings given by value research. Now if you check for net assets, which is one of the important criteria, here you can see the Bhel wala bhaiya example, net assets or AUM basically. Mirai asset has the highest AUM, followed by quant tax, and here you can see BOI tax advantage is like very less AUM. So what we are going to do, we are going to ignore that and we are going to focus only on these 2, right? Let's move on to the returns tab now. Based on returns, let's say I'm talking about long-term returns. So 3 years returns, if you were to check, quant is 37.75% and Mirai is 21.42%. So here quant is surely a winner. If you check annual, that is nothing but calendar returns. Here also you can check that quant is 63% and Mirai is 37%. Again, quant is the winner. But of course, you have to also check rolling returns, which tells us about the consistency of the returns. Chalo, moving ahead, what I can also do, I can check the portfolio tab, wherein I can check how much is the net assets. I can also check the risk stats, wherein I can get the Sharpe ratio. I can also get the standard deviation. Lots and lots of points you can check on this website. More you play with this website, you will be able to get more and more understanding about the mutual fund. Chalo, so now what I have done is that I have just compiled this entire data in this chart, and based on this chart, again, like we mentioned, based on returns, quant is good, but rolling returns, Mirai asset is good. This shows consistency of returns. Now let me directly jump to something known as standard deviation, because let's try and establish the relationship between risk and return. For quant, returns were higher, but that came at a high risk because standard deviation for quant is a shade higher as compared to Mirai asset. Even the portfolio concentration for quant is higher as compared to Mirai asset. Chalo, going ahead with few more points, something like AUM, as we discussed, Mirai is better. For portfolio turnover ratio, quant has a lower portfolio turnover ratio, and in spite of that, they are having okay-ish type of expense ratio, plus Sharpe ratio is also good, 1.29 as compared to Mirai asset. One more important point, towards the end of this table, you can see that how much is the current worth of 1 lakh which I had invested, assuming I had invested 3 years ago. So for quant, it would be 2.62. For Mirai, it would be 1.80. So does it mean that quant is a clear-cut winner? My answer is no. Big question is, what do you want? Do you want are you into the high risk, high return category? If yes, then quant tax plan will be much more suitable for you. But if you are someone who believes that I am interested in more of consistent returns, I am interested in more of lower risk criteria, then for such people, Mirai Asset Tax Saver can be much more suitable for you. So I hope in this entire section you have understood how to check value research online, how to pull various data points, and based on this chart, which mutual fund can be suitable for which category of investor. Well, now you have understood what is an ELSS. You have also understood the importance of investing in ELSS. You have also understood how to choose a good ELSS. मग कशाची वाट बघताय? Start your SIP as early as possible. I'm ending the video where we started the video. Please avoid last minute rush and do proper tax planning. If you've liked the video, don't forget to hit the like button. Don't forget to share it with your friends. And if you want to know more about how to analyze your mutual fund portfolio, you can click here. If you want to know how to maximize your mutual fund returns, you can click here. Till then, take care. Jai Hind and bye-bye.